just providing a little bit of context on some of the major plays that have happened so far in 2023. Kind of been three main narratives I've been focused around this year. Anyone who has been following my trades will see there haven't been many. The first half of the year, I don't even think there were any. It was very, very quiet, and I'd maybe make one trade every month or two. That is intentional. It's important to remember that this is a marathon, not a sprint. And constantly trying to chase losses and make up profits doesn't get you anywhere. It's about making smart moves at the right time and then seeing how that plays out overall. So that's what I try to do this year. Whereas last year, it was a little bit more active, a lot more trades. This year, very quiet because we made the moves we needed to make last year to set ourselves up for success this year. However, there were some plays that were made. So the first being the shift from tech stocks into crypto and vice versa. So initially, there was a massive opportunity, and that was with US tech stocks due to how depreciated they were as a whole. So I'll show you that right here. So if we look at NASDAQ, at the start of the year, it was pretty much at it was significantly down. So, I mean, how far down was it? So it reached a low of 37%. Now, in US tech stocks, that's a lot. That is a significant market decline. It was also pretty obvious that US stocks would recover faster than crypto. And the reason I say that is because nothing was happening in crypto. It was so quiet. And even when there was sort of a little bit of hope, the market didn't move. I personally believe that was due to the mass amount of fear around the sector. There wasn't a lot of institutional money flowing in. Most of it had flown out already, and it was kind of creating a bit of a lull in the market. So it's not likely that there's going to be a significant spike right off the bat. As well as the fact that the US markets historically do actually recover quite quickly when a recovery starts to take place. These markets were over depressed. The valuations made 0 sense. We had massive companies absolutely smashing earnings out of the park. And what happened with prices? Nothing. I mean, I think the one quarter, like Google they beat estimates by like 7% and their stock dropped by like 8 to 10%. It was like, what is going on? This doesn't make any sense. So that is why I sort of saw an opportunity there, and I shifted a large weighting away from crypto into US stocks, so that we had about I think it was at that time, maybe a 50-50, it was either a 50-50 or a 60-40 exposure. 60 being tech stocks, 40 being crypto. And then the recovery inevitably happened, and we got to sort of this point here. So where is it? We got to around this point here in June, and all the way to September, where we've got kind of this whole block portion over here. And it's like, okay, it looks like the market's relatively comfortable in this position. It's dropping, it's recovering, it's dropping. It's kind of stagnating a little bit, trading sideways. So then we need to think to ourselves, well, where are we from our previous all-time highs? 5-6%. And that's kind of where we are now as well. It's literally on the dot where we are right now, but we did end up getting a little bit higher, around 4% to previous all-time highs. So there's not that much upside in terms of significant value that these companies are adding. And the growth that's happening within the sectors as well, it's like, does it justify another run like we saw here past the all-time high? I don't really think so. I think there's kind of a lot that still needs to happen and better opportunities in the market. Whereas like US tech has always been seen as like, this is the thing. I think it's still good to have some eggs in that basket. But overall, for my style, I kind of look for big opportunities in the market, massive growth potential, and I don't see that right now in US tech. We kind of have like a Web3 NFT fad going on in tech right now through AI, and while I do believe AI is going to be a significant player in the future, I'm not ready to go all in on it yet. It's too easy for anybody to get started with this stuff. It doesn't need billions and billions and billions of dollars to compete with some of the big dogs. That gives power to the little guys, actually. It's kind of an opportunity for your smaller companies to catch up. It's another reason I'm not sort of in a rush to jump behind the big players in the space. So with that being said, while I'm not saying there's no opportunity and it's not going to go past the all-time high, I just think thought there was better opportunity within crypto. And good thing, because around about the same time period, what is it, June to September? Yeah, we saw a massive spike in crypto, around 40% in Bitcoin. And if you look at where Bitcoin is from its previous all-time high, as I mentioned earlier, we're sitting around a 65% rally that would get us back to the all-time high. And with Ethereum, it's around about 150, if I remember correctly. So a lot more to go. That's why I've started shifting back into crypto, especially with the bigger players moving money in, as well as strength in the market. So we've seen things shifting. People are getting excited again. People are getting riled up. I've started to see rocket ship emojis. I've missed those damn little things, but they're here, which is a good thing. So it takes time. It's not sort of just spontaneously gonna happen. We need to be patient. That is the game we're in. If you're constantly making these little trades here and there, thinking you're gonna be some whiz broker from Wall Street, not really good. Maybe 0.5% of the people who actually try that will be successful to a degree that it matters. Otherwise, I think you're just wasting time on spreads and everything. But sure, feel free to prove me wrong there. Always happy to eat my words if it means someone else makes a successful story out of it. I just don't. I prefer to play the numbers. Theory and everything I've seen has said play the long game, and every time I've played the long game, we come out on top. So that was the first narrative, shifting from crypto into US tech and shifting back from US tech to crypto. Then, probably my most proud move of my entire investing career is GBTC. It gives institutions who might ordinarily not be able to invest in Bitcoin the opportunity to invest in Bitcoin. So there should be a cost attached to that, and that cost is in the form of the premium. So you'd think that's something that has the potential to have a premium. There we go. Magic. No paywall. So you'd think that something that has the opportunity to be a premium would be trading at least close to a premium. Yeah, we picked GBTC up. When was our first position opened? I don't want to get this wrong. 6th of March. So we picked GBTC up at a 42% discount, which is insane. How on earth is something that is literally tracking something one-to-one, yes, there's some fees attached, very small, something that's tracking an asset one-to-one, how is it trading at a 42% discount? I could not find a single reason as to why this should even be remotely the case. I understand that if it's a A futures ETF, yes, it might be trading at a slight discount, but this is a discount to its NAV, meaning if the fund gets liquidated tomorrow, you get its NAV, excluding liquidation costs and all that. So let's maybe give a 5% discount. Doesn't justify 42% discount. It makes 0 sense. So what did I do? I loaded up on this bad boy. It was essentially free money. This is what's known as arbitrage in investing. When something is trading at a far lower value than it should, when there's essentially zero risk. I saw this as a zero risk trade. Worst case scenario, Bitcoin drops further and the value of GBTC drops further. But that's the value, that's not including the discount. Even if, say, Bitcoin dropped by 5%, GBTC dropped by 5%, and then GBTC recovered to where it should be, it would still be up like 60, 80%. And that's exactly what happened. Except Bitcoin went up. So we made gains both on the arbitrage of this discount tightening to around 8.7% where it is now, which is a significant gain. I think it's between like 60 and 80% if I'm not mistaken. And also the gain of Bitcoin rallying in price. That's why there's this position's up nearly 200%, because you're compounding that as well. So that was number 2 in terms of big plays. Number 3 is busy unfolding right now, and it could backfire, and it could turn out to be a great decision overall. Only time will tell. But the third play is around a switch from Bitcoin into Ethereum. So we have been extremely Bitcoin heavy over the past, 12 to 18 months. We've been very, very Bitcoin heavy. I've just been loading up on Bitcoin, not touching alts. I don't think I've opened a single position in an altcoin over the past 18 months. We were extremely Bitcoin heavy. I include GBTC in my Bitcoin forecasts. Sorry, in my crypto allocation. Where's it here? So I've liquidated a couple positions right now, but we were sitting at around, what is it? I think 25% Bitcoin and around 18% GBTC or 15% GBTC. I've liquidated some positions, taken some profits, and shifted that into Ethereum. So now we're sitting at around 33% Bitcoin, around 30% Bitcoin and 21% Ethereum. It is still very heavily weighted in 2 crypto assets. It's very unlikely that you're going to have a situation where Bitcoin or Ethereum go to 0. They're too established. They're too big. So it is very top heavy right now in those 2 assets. And I will likely be shifting those into some alts as well. Most likely towards either the end of this year, depending on what happens. But I doubt it'll be the end of this year. Also, then you're creating taxable events when you don't necessarily have to. So I'd rather wait until next year. And then I'll look to sort of shift some of the profits from both of those, keeping a healthy ratio of probably about, I want to say 10 to 15% Bitcoin and 10 to 15% Ethereum, depending on the conditions. And then cascading more back into altcoins, because alts are also due a rally. So Bitcoin's had its massive run. Ethereum is yet to have its massive bull run. And I do think Ethereum's run is going to be much more aggressive. And I would expect it to also be a lot more significant than what Bitcoin's was.